Hi, welcome to Chelsea Forum. My name is Duke Bradley, Executive Director of Chelsea Cable TV. Today my special guest is Steve Roussel from the Chelsea Bank. It's called now in the division of the East Cambridge Savings Bank.
Yes, we're Chelsea Bank. We're now a division of East Cambridge Savings Bank.
360 Broadway, is it?
Yes, yes.
Okay, I was just doing a little looking up your bio a little bit. I find it very, unusual. You were born in Chelsea at the Chelsea Naval Hospital?
Yes, my father was stationed at the Chelsea Naval Hospital at the end of a career.
Really?
He grew up in Louisiana, and he joined the Navy at 16 and a half years old.
Yeah.
And he went on to have a great career in the Navy. And he was stationed lastly at the Chelsea Naval Hospital back in the day. And I was born there December 1963.
Wow, I mean, there's not many people say they would want to Chelsea Naval. And then, according to the little bio, that you went to St. Stan's School?
I went to St. Stanislaus, yes. I went to St. Stanislaus from 1969 to 1976. I had, as many of the viewers may remember these names, Sister Dolores, Mr. Jagalski, those sort of, Sister Ernesta. Those were really household names back then, and I'm sure a lot of our viewers will remember those teachers.
Could you speak Polish?
Well, I know one word in Polish, dzień dobry, which means thank you.
Yeah. And what's Yacia Koham?
Oh, not that one, but the other one that rings a bell is Chiha, because in school I was always told to be quiet, so Chiha means be quiet.
Yeah.
So I remember Sister Dolores always telling the students to be, Chiha, which was Polish for be quiet.
So I'm sure you've been by there. What is it, condos now? Has it ever been finished or what?
Yes, they recently were finished. It's a small world. I had gone back there a number of different times just to, go back on the childhood, just to, remember friends and families and some of the people in the neighborhood. And finally I went back about maybe 2-3 years ago, and they finally had converted them into condos.
Yeah. So I was looking over the thing too, and that some of your hobbies, you like to cook?
I love to cook.
Yeah.
I love to cook. As you could tell, I don't push my way away from the table. I push myself to the table because I love to eat. I consider myself
any specialty? Italian?
I love to cook clams and shrimp in a white sauce.
Oh yeah.
Just like there's a restaurant in the North End called the Daily Catch.
Yes, I heard of that.
Really a nice restaurant. I try to always try to cook my linguine, my clams, and my shrimp in that sort of...
my favorite is mussels over linguine.
Oh, I love those.
I love that. That's it.
Mussels, cherry stones, lobsters.
No, I can't eat the... what is the ones they eat? Can't think of it right now. The kids eat.
Squid?
No. Well,
calamari?
Calamari. And my kids can eat it. But fried, I guess they
fried calamari.
Fried calamari.
I like my calamari. I don't like it fried. I like it marinated. Nice
How about
olive
oysters?
oil.
No, oysters?
Oh, oysters, yes.
Really?
Oysters, cherry stones, little necks.
Yeah.
Nice and cold. Little Tabasco, little lemon.
Oh. All right. Geez, is it almost lunchtime? And you do a lot of volunteering in the YMCA, and
yes,
some kind of program it is too. That
I just came from the East Boston YMCA this morning. We had a meeting, and we're having our annual outreach breakfast on April 7th at the Holiday Inn. We raise money. We invite Massport, and we invite a lot of the corporate sponsors. They come in, and we have a silent auction. Our host is Senate President Robert Travellini. He'll be hosting again.
Yeah.
And we raise a lot of money. And the reason why we raise a lot of money is because there's programs that the community needs. And that money helps us leverage funds to get grants in. My special project right now, I've had many over the 16 years I've been volunteering, is a kitchen committee. And the kitchen committee is to help people learn how to eat. If someone, for example, has diabetes, we have chefs that will, with the permission of the person, will reach out to the doctor.
Gluten-free too?
Gluten-free. They'll teach you how to eat to try to control your sugar level. That's just one aspect of the program.
Where is the YMCA, in East Boston?
It's there's two buildings.
Not the Paris Street.
No, Paris Street is under renovation. They're going to be doing a nice gym there, but right now we're located at on Bremen Street,
Reman?
right where the park is.
Yeah. Oh, yeah.
So
yeah,
that's
yeah.
one of our buildings.
Yeah.
And then the kitchen that we teach people on how to eat. We teach them on how to get SNAP, food stamps, things like that, to help them eat well.
Read labels.
Read labels, and know what the favorite pastime over at the kitchen is at 56 Ashley Street at the YMCA, is that parents are actually bringing their kids and they're going to cooking lessons in cooking school, and the kids are loving it. We have a program with the kids where we teach them on how to garden, where they grow tomatoes and cucumbers. Yeah. So from the seed to the sun to the water. What they end up doing is they end up cooking with the stuff that they grow.
Yeah.
And it's really, I got to tell you, it's to me, it's amazing what these kids are learning.
Do you talk to them at the schools? Do they have lunches at school?
You know, what you'll find in East Boston, I think Chelsea a lot, is that most of our kids are eating breakfast, lunch, and a snack before they leave, because unfortunately, many of the kids, because of the amount of money that the parents are making, and sometimes the parents are working 2 jobs, they don't have a chance to eat properly, and that's a problem. So after the kids go home from school, they may not eat dinner.
True.
They might have to wait until they have breakfast. So what we're trying to do is we're saying, hey, don't let the economics get in the way. They teach them on how to shop, read labels, know the ingredients, and to really eat better food. I mean, you can eat an apple pie, but you can't put like 5 pounds of sugar in it.
Exactly.
They'll try to teach them on how to, you have to give up a little taste, you have to give up a few calories, but it's more of a healthy apple pie.
Yeah.
So those are the alternatives. Instead of eating, French fries, they'll maybe teach you how to do a butternut squash or a baked potato. So they try to work it in for you.
I know they're doing that in the Chelsea schools. They really oversee what they're eating now. They're taking out soda out of there, and so so they can't get these things. But let's get back to how long you been in the banking business, and what's your specialty? Are you a banker per se?
That's interesting. My whole family thinks I'm a banker. I'm really not a banker. I've been in the business for 25 years, and what I specialize in is mortgage finance. A banker is someone that can do mutual funds, they can do investments, they can do insurance, they can open up accounts, checking accounts, savings accounts. What I specialize in, Duke, is I handle mortgages. I specialize in residential mortgages where I finance condominiums, single families, 2 families, 3 families, and 4 families. And what we do as a bank, because we're a community bank, we have a lot of special first-time home buyer programs. Yeah. These programs have a reduced interest rate, they have no points, they have lower cost, and they have flexible underwriting guidelines. And we also use Chelsea Restoration for down payment and closing cost assistance.
Yeah. Now, what was the Dodd-Frank bill? How did this come into play for you guys?
Well, the Dodd-Frank bill was a reaction by the government back in 2008. Bonnie Frank, our congressman, and Chris Dodd, a senator from Connecticut, had saw all the abuses that our borrowers and our viewers have probably experienced. I don't think there's a borrower out there that hasn't experienced a family, a friend, a neighbor that lost a house through foreclosure, that went through modification, had a short sale property, or bought a short sale property. There were a lot of practices that were happening. There were a lot of bad mortgage companies, a lot of bad loan officers.
Were they giving loans to people that really,
they couldn't afford?
Yeah.
So what would happen is that people were actually, they were doing stated income, no documented loans. And what they were doing, they weren't taking full applications. And what they were simply doing is not following good principle rules on financing, because you have to have so much income versus so much debt to be able to qualify for a mortgage. Back then, there weren't those rules. So as a result, people bought expensive homes and they couldn't afford them.
So how does a mortgage company win by that? Though if they know, if they're looking over your application that you really can't afford it, I don't understand that part of it. That why would they issue a loan to them knowing that eventually they would lose the house?
Well, that's because the way the system had worked, Duke, was that the originating company would sell the mortgage. They would use practices that weren't really good for the consumer, but good enough for them to get financed. They would get paid, make a profit, make money, and they would sell it to an investor. That investor could be in
The
Europe.
investor would buy them.
They would buy it, and what was happening is there was no rules and regulations where the originator, the people that were taking the application, there was no follow up or rules or
Were they
checks.
fly by night states? A lot of
A lot of them are fly by night and no longer around.
Yeah.
And what was happening is now today, what's happening is there's more audits. Every file goes through an audit. There's more paper trailing. At our bank, at the Chelsea Bank, right here on Broadway, we have auditors coming in just to make sure we're following the new policies, the new procedures. All these were a reaction to the Dodd-Frank bill because of all the unscrupulous things and acts that were happening.
Yeah, yeah, it's amazing.
So as a result, the customers lost their homes.
So where are we at now, say, like looking at foreclosures? Is it stabilized? Is it pretty?
The foreclosures, there's still a few out there. Short sales, there's still a few out there. And what's happening is in the last few years, there's been nonprofit organizations that have been trying to modify these mortgages to make it more affordable. Yeah. And then the other thing, Duke, is that, remember back in 2008, a lot of people had lost their jobs.
True.
Millions of people have lost their jobs. Right. And now people, the economy's a lot better, a lot stronger. The people are back working, okay? And now because you're working, now you're able to pay the mortgage, okay? Back then what was happening is if you lost your job and you try to get a home equity line of credit or a home equity loan or try to borrow money, if you don't have a job, you can't qualify.
Right.
So today, the government had done a great job with the stimulus money. And what they've done is they've actually now held mortgage companies and banks and credit unions accountable. So if you were a customer and you ended up getting into trouble, like you lost your job, we're more hands-on.
Yeah.
The rules and regulations now are saying that, hey, don't foreclose, don't do a short sale, don't modify, bring the customer in.
Are people intimidated coming in? I mean, they...
Yes, and that's a good question. Duke, what I have to say for the viewers, if there's one piece of advice that I give all my borrowers that I work with, that if you do get in trouble, life happens. Sometimes, you're not working as much. Sometimes you get sick, you're not working. If there is something that comes up where you're unable to pay your mortgage.
You can't be a cold-hearted mortgage.
Where the government now wants us to reach out and help. Yeah. And that's something that is one of the rules that did change, because back then it was all or nothing. At the Cambridge Bank, I work with a man named Joe Vernard, and Joe is forever working with people that are in trouble. Yeah. And it's our job as a relationship. It's easy to have a relationship when it's really good, but what happens when times get bad? That's when, the smaller banks, a community bank that's vested into the community, is more apt to help the people. So if I can give the viewers some advice, is that if you do get in trouble, call your bank, whether it's a large bank.
You know what I'd like to do, Steve? I'd like to perhaps have a monthly show. If you could bring in someone who's applying, for, and talk about how to apply for these, these mortgages. And I'd like to start a little show like that if you could entertain that.
Oh, absolutely.
I'm going to ask you some questions because you're the boss here in this stuff. So if you've answered some of the things, you can run over them, but you run with the ball, okay? I'll ask you some questions.
Okay.
What types of mortgages does the bank offer?
Well, we offer first-time homebuyer programs. We have first-time homebuyer programs that have low down payment. So a lot of the people have this perception where they need a lot of money. They really don't need a lot of money, Duke. When they're buying condominiums and single families, in most cases they need 3% down.
3%?
On 2 families, 3 families, and 4 families, they need 5% down. So to give an example, if someone's buying a $400,000 2-family, they don't need to have the whole 5%. But if they had 3% of $400,000, which would be $12,000, okay, they could get the other money through maybe their employer has a grant for them as an employee, which is part of their benefits. Yeah. They could go to the municipality, like Chelsea Restoration, if it's Chelsea, where they can get an $8,500 down payment and closing cost assistance. They could have the seller participate to pay for closing costs, and they could have family members give them a gift. Yeah. So a lot of these people think that it's insurmountable where they need to have the 5%. They need to have the closing cost. They need to have the taxes and the insurance and the reserves. And when they look at that big number, they say, oh my God, for a $400,000 house, I need about $26,000. But they don't realize that they only need $12,000 maybe of their own money.
Yeah.
And maybe in some cases where they might only need $6,000.
But are they looking at the long run, what the mortgage would be, the payment a month? So when you put the more you put, obviously, the less you're paying.
Exactly.
So when you're putting like the 3 or the 4, is it work for them, or you got to figure that out for them?
Yeah, we figure it out, and what we do is we look at their income, we look at their debts, we look at the price.
And rental.
And we look at the taxes, we look at the rents, we look at the condo fees, we look at the payment. There's ratios that we work with, but what we also do is we help them piece together on what they can do to maybe, if they don't have that $26,000, to maybe have the seller pay for closing cost, for their employer to help them, to maybe get a gift, to maybe, some people don't realize that they have a 401k, or if they have a 403b, if they're working for a nonprofit, that they could actually take that money. We actually help people understand what their options are.
Yeah.
And what we try to do, Duke, is we take a snapshot of where they are today. So it's just like a photographer taking a picture. This is where you're at today. If this is where you want to be, we give them recommendations on how to get there. And sometimes it might take some time. One of the examples that I can give to you is that we do a lot of credit counseling, where some people, because they've lost their jobs, because they've had a bankruptcy, because they've had a short sale, because they've had a modification, they think that they can never buy again. Mm. But for the viewers out there, that if they have reestablished their credit, and if 4 years have gone by since they've had that trouble, and they have 3 sources of credit for at least 2 years, they can now buy again. Mm. So some people think that because they've lost a home, they're unable to ever buy a house again. The message today is that there are programs out there that will help those people buy.
Now, do you go out and look at the houses to tell them if it's worth the money that they're being sold for? You evaluate and tell them that's really too much money for what you want. I mean, what you should buy.
You know, it's a good question. What I do is that I have a computer module where if they have the property address, the city, the state, and the zip code, I can actually plug it into a computer, and I can tell them how much I think it's worth. Now,
how they should negotiate? They could negotiate with the seller?
Well, yeah, because what happens is I'll kind of know what the house is worth, but then I'll recommend them to work with a realtor, a local realtor that knows the market. And what that person will do, they do what they call a market analysis, which will be a better estimate of what the house is worth. And then there's a lot of other things that are going on into the transaction, like how long the house has been on the market, how big it is, the location. And the realtor will be working on their behalf if they're a buyer's broker, and they'll negotiate. They're part of a team with the buyer, and they'll negotiate with the seller on what they think a fair market value is. And then in the end, what happens if the buyers can't come back to me, we send out an appraiser, and the appraiser, who's a licensed appraiser, will go out into the marketplace and actually appraise the property. And it's what the appraiser says is going to determine what it's worth.
Yeah. And do you work with realtors? They come in and try to work with you to adjust the payments or the cost of the house or anything?
We work with a lot of local realtors in Everett, in Chelsea, in Revere, in East Boston. They know what we have to offer. And if they have situations, if they need advice, whatever that advice is, part of our job at the bank is to help people and help people get to the right people. So sometimes if I don't have the answer, I might go to Joe Vernard. Yeah. The other day, we had an instance where someone had bought a property and they had a fire at the property. So Joe had gone out to the property to see what we could do for them. Mm-hmm. And so we could sit down like we're having a conversation today to see what we could do in our powers to help them and to give them good, solid advice. Yeah. I think the problem is that some of the people, when they're dealing with these big box banks and they're dealing with these big investors, they're only a number. So what if the bank in California gave you the money? They don't know Chelsea, Massachusetts from Chelsea, Georgia, right, from Chelsea, Texas. So, you know, we try to do that. We're the community bank, and what we're trying to do is help people when they need the help the most. A lot of people don't ask for help until they're in trouble. And when they do get in trouble, Duke, the biggest problem that we see is they panic.
Yeah.
And then, then they start listening to other people, and sometimes they're not getting the right information. So my advice for the viewers today is that if you have a problem with your insurance, go to your insurance agent that you trust, that you have confidence in.
Yeah.
If you're having trouble making your mortgage payments, you know, go to a bank to see if something can be done.
Well, let me tell you, the guy you work with, Joe Vanad, he's got a great name in Chelsea and in Saugus, where he comes from. So people respect him. He's on a lot of committees. He helps a lot of people. He's working with these battered women. He champions that cause every year. Joe's got a great name in the town. So you're with a great guy, you know. So, I mean, if there's anything you can learn, you probably know everything, but Joe would be the guy to run to.
You know, I just, we were at the community center at the Shirtlift School, and Joe had dressed up to be Santa.
Oh, yeah.
And he did such a great job, and he had, I don't know, 400 to 500 kids, 4 to 6 hours of continuous.
I know.
And, you know, Joe is a special guy.
Yeah.
And I think that the people of Chelsea know that. I myself, I appreciate Joe more than probably anybody else. I have worked for other people, and I got to be honest with you, he is a pleasure to work with. Very knowledgeable. He shares his information. He has a great heart, as you said, and he's been a great mentor to me, and he's had me become acclimated to the bank, because it's like anything else. When you when you work for a new organization.
How old is this merge, anyways?
The merge, from what I can understand, is probably a year old.
Is it?
The Chelsea Bank, the reason why the Chelsea Bank became the East Cambridge Savings Bank is for Joe to have more resources,
right.
more resources, more money, more products to help the people of Chelsea.
Yeah. I want to ask you something. Did he ask you to look to see if I had socks on today?
Well, you know, I can comment on this. I'm looking at your blazer.
No.
I'm looking at your socks. I'm looking at your shoes, and I have to say the socks do match.
Yeah, no, Joe, I don't wear socks normally, but for you today I put on socks. But Joe,
I do know
that's
that.
the first thing he always does. He picks up my pants and see if I got socks on. But after Thanksgiving, I
That might be the first question he asks me.
He will.
He may not ask me how
Yeah.
everything went today,
You
but
know
he'll
what?
ask me about the socks.
Steve, I'm going to turn it over to you because I could be redundant probably in going over things. You want to go through a few of this list, and you can. It's your show, okay?
Okay.
If you want to come back, let's see how you do. All right, you're on the spot.
Excellent. Well, you know, the one thing, Joe, that I see on the list that as we were preparing for the show that could help the customers is that there are programs that offer no private mortgage insurance. And a lot of the banks out there only have programs where people have to pay private mortgage insurance. And what that is, Duke, is that there's an additional cost. When someone doesn't put 20% down on a house, they have to pay an extra insurance to ensure, God forbid, if they are unable to to pay the mortgage, that there's an additional insurance. We have some programs, for example, with Mass Housing that has no private mortgage insurance options. We have a program called the MHP, the Product One, that has no private mortgage insurance. And what this does, this actually saves customers $200 to $400 a month.
Really?
If you had $200, $300, $400 a month net, you could put that money into a 401k, like at work, or a 403b. Now, if you're able to put that money there, now you're able to maybe get match money. Maybe you could use it for college education. So, you know, what I would ask the viewers that when they are looking for a mortgage, maybe see if they can go into a no PMI program. It will save them a lot of money. Another thing is people get confused between pre-qualification and pre-approval. What a pre-qualification is, someone will have a conversation like we're having a conversation. And Duke, I'll ask you, what are your debts? Do you have a car loan? Do you have a student loan? Do you have credit cards? I'll ask you for your income. Most people are working regular jobs. Some people are self-employed. Some people get money through disability, through other sources like pensions. And people think that they need to work, but sometimes they have an income stream that we can use.
Do you go by their score?
Yeah, we go according to credit. There's quality of credit, there's quantity of credit. There are score minimums that you need, but even then, when people come in to talk to Joe or I, because Joe does, residential too, we'll tell them what they need to do to increase their credit score. Mm-hmm. So the two biggest ones that I can say to the audience is that if they were to have, say, 3 or 4 credit cards, if they have, say, for example, a $5,000 limit, if they only use 50% of that capacity, which is have an outstanding balance of $2,500, your score is going to be a lot higher than if your limit was $5,000 and you owed $5,000 because you have no capacity.
Do you pay the higher one if you have 3 credit cards? You try to knock that one down to increase your score?
Well, if you pay down the balance to 50% of what the limit is, your scores are going to go up. Versus if your capacity is at 100, then your scores are going to go down. So we tell people to try to keep their limits and their balances of their loans to about 50%.
Are the scores totally accurate? Oh, you're going like with there's 3 different agencies that furnish the scores, so
yes,
they can differentiate, can't they?
That's why they have the 3 agencies, because sometimes an agency will pick something up, whether it's right or wrong, than the other agency. So you have TransUnion, you have Equifax, and you have Experian.
Right.
And what happens is the industry standard always goes to the middle score. So what we do is we disregard the high score, we disregard the low score, we go to the middle. But if there's anything that is on the credit report on any of the 3, we need to count it unless the borrowers can show us evidence that it's not accurate or it's been paid. Or
what if a person had gone bankrupt? Do they have to wait that certain length of time to qualify, or do you have another program for that, or is there a waiting period? Or?
Well, it's a good question. If someone has a bankruptcy, there's 2 types of bankruptcies. There's a Chapter 7 and then there's a Chapter 13. Chapter 13 would be a reorganization. So what happened was, for example, someone lost their job.
Right.
Let's say someone was making, say, $60,000 a year. They lost their job. They got downsized. They started a new job, but they were making $35,000, and they couldn't make their payments. They had run up their credit cards to keep food on the table, to pay their insurance, keep things flowing. Yeah. And it got to the point where they couldn't pay anymore. So they go through a bankruptcy where they reorganize their debts. Right. And they'll work out a payment plan. But then the other one, the second one, is a Chapter 7 where maybe the person that was making $60,000 a year couldn't find a job for, like, say, 3 years, 2 years, because the economy had been so bad, right, that they totally wipe out their debts. So there's rules for the reorganization, Chapter 13, and then there's rules for the Chapter 7. The Chapter 7, which is the worst, is that you have to wait 4 years until the bankruptcy is discharged through the courts. And then the recommendation is to have 3 sources of credit for 2 years, and that way it shows that you can handle the responsibility of credit. Yeah. The biggest mistake that a lot of our viewers, or some of the people that I come across with, make is that once they go bankrupt, they pay everything cash. So even if it's 5, 6, 7, 8 years from now, if they never reestablish their credit, right, they haven't shown that they can handle the payments. They can't handle the financial obligation. So for those people that made a mistake, we just got out of a period where it was the worst economy in the last 100 years. There were a lot of things that people lost their job for no fault of their own.
I'm sorry for the noise. We got a bowling alley upstairs.
We're gonna have to go up there and have some fun after this.
We got to tell them that when we have a show, please don't move the furniture around.
And they're doing a lot of work up there, I can tell you. But a lot of those people, it happened. It's beyond their control, and they just need to reestablish themselves. Some of the things that people do, they just have this mindset that, hey, I went bankrupt, I've lost a house, I'll never be able to do it again. I'm here to tell you that if you follow the rules, which is the worst case scenario on a Chapter 7 bankruptcy, you've lost the property, you went bankrupt, you let 4 years go by, you reestablish yourself in between, and on the fourth year of the anniversary, you're ready to go already with all the first-time homebuyer programs. So don't let one bad instance affect the rest of your life.
So this is what you counsel them with, huh?
Yes.
How to work through this.
And sometimes, there's certain things that we handle at the bank, but then we have partners. We have a lot of partnerships. We collaborate. For example, Chelsea Restoration.
Yeah. We
collaborate with Chelsea Restoration. They do some things that we don't do. But there's other places that we go to also to try to help people. Yeah. And depending on what those circumstances are. So if someone said, geez, I went on Zillow, I went on Trulia, I really want to know what my property value is, I might say to them, hey, listen, you're going through a set of situations that you need to know the value. Maybe you're going through a divorce. Maybe it's a parent's house that's now deceased and you want to split it up with three siblings, you want to know what it's worth. We'll give them the name of an appraiser. If someone has some legal issues, maybe they have a tenant issue, that maybe the tenant isn't respecting the property, they're damaging the property, what do you do? Yeah. We might have them consult with an attorney that's on our list. We might have them go to a housing agency. We'll try to get them the help depending on the set of circumstances that they have, Duke.
Do you know Joel Meza?
No, who's Joe?
He's a good friend of Joe's. He's in the attorney's office right next to you guys.
All right.
He's a good guy.
Yeah, a lot of times.
He's in Chamber, he's in Rotary, he's a good guy.
I haven't met Joe, but I look forward to meeting him. We're working with Mark White.
Oh, Mark White.
Mark White of Hangstrom and White. He's really good with the deed restrictions, so I've dealt with Mark. I know him. And then we're working with Crafton Hall right up on Broadway.
Yes.
Dave Midland, he's one of our attorneys. He's a good guy. But, I like to, hey, Joe, if you're out there, just come by the office and introduce yourself.
Yeah.
And I just, like to meet you.
Yeah, it's one of Joe Bernard's best friends. He's a nice guy. So you run through that. Do you see anything that you haven't covered?
One thing that really comes to mind, and this is happening an awful lot, is point number 8, where if someone is not making a lot of money and they want to buy a house.
Yeah.
Let's say they want to buy a single family or they want to buy a condominium. And let's say they just graduated from school or they're a real young person, 24, 25 years old, and they're not making a lot of money.
And they get college loans.
And they got college loans. You might need a parent, a mother or a father, a sister or brother to co-sign. So what has to happen is the biggest fallacy, the biggest mistake is that everybody thinks that if the young person is buying a property, that everybody that's on the note, the mortgage, and the deed has to be living in the property. That's not so. I just had a young woman who's a medical assistant, has a husband who's self-employed, doesn't make a lot of money, and they weren't making enough money to qualify for a lovely single-family house that they're buying in Lynn. And we had the grandmother co-sign, and that was enough where we blanketed the grandmother who's living in her own house.
Doesn't have to live in that.
Doesn't have to live in the house that the young couple is buying in. And we're using everybody's debts, everybody's income, everybody's savings, everybody's credit, and she's going to be what they call a non-occupant co-signer because she's not going to occupy the house. Right. That's something big.
Is that new? Has that always been in existence?
Believe it or not, it's always been there.
Didn't have to live in
It's always been there.
Yeah.
It's always been there, but again, a lot of the people that are buying only buy 1, 2, 3 houses at most in their lifetime. Mm-hmm. And since 2008, it's been the biggest wave of changes in this mortgage industry has ever faced. Mm-hmm. I would probably say since the beginning to 2008, everything was the same. But from 2008 to now 2015...
So you have to be up to speed on all these changes, too.
You have to be up to speed
daily,
on this
probably,
stuff.
So.
You really do. The one thing that I can say is that Chelsea is a nice, really a great place. It's a pleasure to be back. I never really went that far. As we had said that I was born at Chelsea Naval Hospital, which is now Admiral's Hill. I went to St. Stanislaus. I have a lot of friends. The Chelsea Chamber's been great. We've been doing a lot of events together. And I grew up in East Boston. Went to school here in Chelsea at St. Stanislaus. I'm living in Winthrop. And it's just great to be back to Chelsea and just catching up with old friends and making new friends.
Yeah. You got a good guy, too. Trav's a great guy.
Oh, Bob, yeah.
Yeah, he's a great guy,
There's only one Bob Travellini.
Yeah, he's a lobbyist now, isn't he, Bob?
Bob is a lobbyist.
He was Senate president.
He's the Senate president. He's a friend. And he's one of those guys
His
that...
brother worked here, Joe Trevelyan.
Oh, Joe?
Yeah,
Joe worked here?
He was assistant city manager here.
Oh, I didn't know that.
Yeah, he's a great kid, Joe.
I know his brother Paul really well.
Yeah.
Paul's a good guy.
Yeah.
He has a brother that is now working in Chicago for a large investment firm.
Yeah.
But you know, Bob is the sort of guy where at the YMCA he's hosted our show, and he's been great. And he's just a friend. He's a mentor, and he'll do anything that he can.
Well, Steve, I want to thank you for coming in today. And like I say, if
Thanks,
we can
Duke.
do something monthly, if you want to,
I'd love to do
program
that.
and just be, this is great for these
And
people to learn.
For any of the viewers, if they have a topic or an issue that they have, they can either call me at 617-686-7988, or get me on my email, which is SROUSSEL@ECSB.com, or they can call into the program.
They can call into the program if they have questions. We'll submit them to you, and that'll be the basis of our
And that will be our
program.
topic.
All right, once again, Steve,
Thank you so much.
It was very informative. This is Duke Bradley. I want to thank my station manager, Paula Batchelor, and of course my great technician, Ricky Velez. Thank you for watching, and good evening.